Hey guys, we're here for our next session. We have Ryan, CEO of Masari. He'll be talking about the Bitcoin halving. And
All
I'll let you
right.
here.
Thank you for having me. Hello, everybody. I'm going to share my screen. And we're going to go through a very brief presentation. The name of this presentation is The Halving is a Meme. I did a background for everybody. This is Ryan Selkis. I'm the founder and CEO of Masari. This will be my second halving. I've been involved in 2 bull runs post halvings, but I got into the industry in late 2013, right when the fever was hitting its zenith in that last major bull run. In 2016, 2017, I was running CoinDesk. So we actually ran a few events around the last halving and got to see the craziness that ensued from mid 2016 through the height of ICO euphoria in late 2017, which happened to coincide with the time that I started Masari, a data and research company focused on the universe of crypto assets. So you can think about us as a resource for professionals and hardcore investors that are looking for resources beyond just number go up. I want to be, pretty transparent about my thoughts on the halving and why I believe it should be priced in, but it's probably not, which sound like 2 very conflicting things. But it all comes down to the power of memes in crypto. And the halving is maybe the ultimate meme, penultimate meme, maybe second only to there will only ever be 21 million Bitcoins. The halving, because it has resulted in some of Bitcoin's biggest runs, and because it is so predictable and has always been predictable from day one, is perhaps the narrative that picks up the most steam once every 4 years and gets people excited because of charts like this. After the first halving in late November 2012, it was the big mega run that I referenced where we hit $1,000 for the first time. It had been going from the low double digits all the way up to 1,000 in less than a year. 85 times growth in 2013. And then, of course, the second halving from an 18-month period in mid-July through end of 2017, we had about a 30 times run. So people see the end of this chart and they say, wow, this could happen again. Does that mean that we'll be at 100,000? Does that mean it'll be 200,000? Depending on who you listen to, this is a foregone conclusion. Anyone that knows anything about statistics knows that this is N of 2, and this correlation is not necessarily causation. I tend to think that there are so many variables that ultimately led to Bitcoin's rally over a decade on a pretty sustained basis. And the halving is a very, very small part of that. But nevertheless, we've got people excited about it because of a couple of reasons. One, there is some truth to the fact that there is going to be a reduction in cumulative sell-side pressure from new coins that hit the market. If you look at the amount of Bitcoin that's mined every year, current market cap, about 3.6% is the annualized inflation rate. That ultimately nets out to about the same amount of Bitcoin as is currently held that we know about on the balance sheet of Binance, Bitfinex, and BitMEX. So if all 3 of those mega exchanges liquidated their entire Bitcoin balances, it would be about on par with the new issuance that we expect on an annualized basis right now pre-halving. That's going to cut in half from 4.6 to 2.3. At the same time, we know that the Bitcoin blocks have consistently been filled with 2 types of fees: new issuance and inflation, and then actual transaction fees. The big question for us this time around is whether this halving is going to finally lead to a gradual tick up in Bitcoin transaction fees per block, because the miners are starting to get, I would argue, perilously low in terms of their incentives to actually maintain the network. We're going to fall under 2% inflation for the first time. You saw from the previous chart, that's $2.3 billion annualized. But in percentage terms, in terms of the network, I would expect that what has traditionally been low single digits in terms of transaction fees to finally start ticking up slightly, maybe not overwhelming the seniorage reward, but ultimately ticking up so that over time, there is some sustainable fee-based model that emerges that incentivizes Bitcoin miners to keep the rigs on, not just at this halving, but next year, the year after that, when the inflation rate starts to tick below 2% and get as low as 1% by 2024. The biggest misconception, I'd say, going into this halving in terms of bull market narratives is the stock to flow metric, which you may have heard about. This was proposed a couple of years ago and by an independent analyst. The stock to flow ratio is not really anything fancy. It's basically just the reciprocal of annualized inflation. So one narrative that is really kicked into high gear with this particular halving is that Bitcoin as digital gold is going to have a quote unquote stock to flow similar to gold. What does that mean? Well, you look at the total market cap, the total available value of the asset that is currently floating, and then you look at what could be issued on an annualized basis. Both Bitcoin and gold and silver are relatively predictable. Bitcoin will catapult way past silver and into gold territory with a stock to flow over 50, which basically just means that its inflation rate is dropping below 2%. This is where it all ties together for me. And when I say that the halving is a meme, what I really mean is it is an encapsulation of the much more important narrative. Whoa, down the rabbit hole. How do I X out of this? I only had a few slides. I'm going to leave most of it open for Q&A. It is a hardening of the 21 million coins narrative. And I could argue all day long, and I have, to anyone that will listen, that the most important macro drivers for Bitcoin's price appreciation in this next cycle will be what goes on in the broader stock market and what goes on in the broader world economy. If we truly enter an environment where there are inflationary pressures, then this halving is symbolic because it finally brings the cost of issuance below that critical 2% threshold. At the same time, I believe that there is a sliver of truth to the pro-cyclical arguments around miners and their behavior, and that is, as miners' margins decrease, they sell a larger percentage of their coins. That makes intuitive sense because generally they're trying to keep their operating costs as in line with their operating revenues as possible. The net result is that in an environment like we are currently in, the average cost per miner to mine a Bitcoin might be in the 3,500 to 4,000 range. That doubles by definition right after the halving. There will be some small difficulty adjustments. You could obviously imagine a scenario, as our last panelist likely alluded to, that some of this mining capacity falls off, so the margins change slightly. But we saw last time around that was a very short-term issue that ultimately worked itself out in the difficulty, and there was a minor dip for just a couple of months, and then the hash rate continued to rally with reckless abandon, as it has for the last 10 years, essentially unimpeded. With all of the new mining capacity and the next generation miners that are coming online, I would expect the cost structure to change and continue to evolve. So you get to a point where immediately post-halving, you might have a slightly higher percentage of coins that are being sold. But after a several month period, it's not going to matter because the miners that are still in business will have positive gross margins, and they are generally net long the assets that they earn that are not necessary for ongoing operations and ongoing investments. What does that mean? Well, that means that even more Bitcoin will ultimately be removed from day-to-day selling pressure. Regardless, one other metric that we tend to take a look at Messari, and encourage you to check out Messari.io if you want to be able to compare all of the proof of work coins across over 150 assets. But we think about this in context of the new issuance versus the real volume on a day-to-day basis. Bitcoin has $1.5 billion in legitimate trading volumes on all the major exchanges. Contrast that to about 17 million in new coins that are issued right now. This is pre-halving. And you can see the multiple there is about roughly 100 to 1.
Hey, Ryan, do you mind sharing your screen?
I forgot to share. Share it one more time. Share. This is a screener that I created at Messari.io. You can play around with this for free. But just a couple of columns that I've highlighted. Reported market cap, real volume, which is basically the exchanges that have non-manipulated or wash traded volumes included. And then looking at the actual on-chain issuance for the proof of work networks, you can see that something like Bitcoin, the real legitimate exchange volume on a day-to-day basis is about 100 times the new issuance. So to think that when the halving transpires, that all of a sudden this sell-side pressure is magically going to evaporate and lead to a bull run doesn't really make sense on its face, because you're only talking about post-halving 0.5% of the daily real volume, which is a very low to negligible percentage of sell-side pressure in an order book. If you contrast that with something like Zcash, on the other hand, which currently has a 26-27% inflation rate, and that will get halved down to 12.5% after its first halving, the ratio is quite a bit different, where about 5% of the daily order book must be sold, because if you just take 320 over the 8 million, you're getting to a much, about 10x higher percentage and proportion of new issuance that has to be sold into that global order book just to run in place at the current prices. So I encourage you to check out, more assets and more screeners that we have on Messari. It's all free, and you can look at stock to flow. You can look at inflation. You can look at, kind of across the board at a number of different metrics as you're thinking about the impact, not just on Bitcoin, but on Ethereum as they consider governance changes and seniorage changes, Litecoin, Zcash, and most especially any of the other earlier, younger proof of work coins that might be higher inflation today, or privately issued coins that have massive treasuries that are ultimately going to have to be distributed and unwound and basically create, net effective inflation as those are distributed. So that's all I'm going to share for today. I want to make sure that I keep the 15 minutes open. If you are interested, our team has a mega research report coming out on the halving with the bull case, the bear case, the history, the correlations, ton of different data points across the first 3 halvings. And that will be available for free in the next week or so over at Messari.io. So sign up for our newsletter, sign up for Trial Messari Pro, and you can get access to that with no strings attached. With that, that is about 15 minutes for a general overview, and I will get right into some questions. All right, so the first one, does USD have a stock to flow? That is a damn good question. I have not looked at that. I don't think we've incorporated that into our chart and our screener and metrics on Messari, but it doesn't really matter because the Fed is not auditable, and we don't have a good idea. But I think that U.S. dollar, especially in this environment, the Fed has a much lower stock to flow than gold or digital gold for sure, given the amount of money that they've been printing. PK asks, are you planning to break some cement blocks for this halving? No, I'm not, but it sounds like a good idea. If only I were somewhere where there was construction going on and I wasn't locked down in the Citadel for this halving, I would absolutely consider it. Do we need to have $14,000 USD Bitcoin or higher to keep miners alive post halving? So this is from Brombino. I had alluded to this a little bit. But the large industrial miners have two forces there's three forces coinciding right now. One is historically cheap energy based on the crash in the petro markets. Two is the impact of the halving, which is obvious, right? Your cost structure doubles on day one. But third is this foot race between industrial mining farms and when they can get set up with the next generation miners and mining equipment, and then kind of the everyone else bucket of miners. So the hobbyists and the smaller farms and those that don't have access or preferred access in their supply chains to the next generation miners will probably just fall off. You'll see maybe a very temporary fall off in the difficulty and hash rate for Bitcoin as a whole. But as we saw in the last cycle, there was a very small dip immediately post-halving in 2016, and then it immediately reversed because mining is a ruthlessly competitive market, and the technology and the industrial setups are consistently getting better and better and better. So we basically saw a negligible effect. And most miners, especially with the recent mini run-up, are still highly profitable, gross margin profitable, and net profitable as well. If we saw another liquidity crunch in the broader macro environments and Bitcoin went back to the 5,000, 4,000 range, then it gets a little bit dicier for many larger miners as well. All right. Is COVID-19 affecting halving already because of mining in China? Market share being based there, or does this not matter? Sorry, dumb question. I'm still a noob. Aaron, this is not a dumb question. This is a very good question. In fact, we did see supply chain disruptions early on in the coronavirus crisis with MicroBT and Bitmain, two largest mining manufacturers, the ones that are in a current arms race for next-gen mining supremacy in terms of the efficiency of the chips. And ultimately, this created a dynamic with haves and have-nots that were reliant on those companies for the new mining chips. And I believe many of those supply chain issues have now mostly been ironed out, although there were some early delays with some of the factories for those two mining manufacturers actually in just the south of Beijing. One was in Wuhan and another, I believe, was in Shenzhen, were two of the worst affected provinces in China early on in the crisis, although for the most part, China has now reopened. So I don't think that is going to impact the halving. I don't think it's going to impact the dynamics in the mining market, but I'm actually not a mining expert. So maybe we should have kept those other guys around from the previous session. They could have done a special celebrity appearance for this particular question. Kat asks, these screens are free on Messari website. Yes, they are. If you go to messari.io and you click screener, you can compare 1,000 plus assets across 150 different metrics, but there's probably only 100 or so assets that actually matter. Ultimately, we think that number will be much, much larger long term. Can you recap what is your Bitcoin price forecast? I do not give Bitcoin price forecasts for obvious reasons, but I do believe that Bitcoin will either be $1 million per coin one day, or it will be somewhere close to zero, but it will never actually get to zero because people like me will buy it all the way down. Would Rentech, a top quant hedge fund, start to trade CME futures boost or harm Bitcoin price in your opinion? Rentech is a top quant hedge fund. Renaissance recently had a filing where they disclosed that they were going to start trading CME futures, or at least opening themselves up to be capable of trading futures in the Bitcoin market. Renaissance is, I believe, the top performing hedge fund of all time. So it is neither good news nor bad news whether some of these quants are in the market. I think what it does is it certainly improves the liquidity of Bitcoin futures markets. It improves the optics and legitimacy of the asset class to have some of these large, well-respected hedge funds in the mix, but they are not religious zealots, like I'm sure many people in this chat and that have attended this conference are. They will trade. When they think it's too high, they will short. And when they think it's too low, they'll go long. So I don't really spend too much time thinking about the names that are entering the markets, whether they're going long or short, because it could be neither or both within the same 24-hour period. Yes, Kat, I also assume it will reduce the price volatility, but that is a relative term because everything could be very volatile coming up in general. And because Bitcoin is such a small asset class still, we're at about 160 billion market cap, still only about, 2% of the gold market cap. That means that if there is some type of rotation from gold to digital gold or some portfolio rebalancing so that people can get a very small allocation in these institutional portfolios to Bitcoin, then that's going to drive volatility regardless of what some of the dampeners look like in the futures market. Kat asks, are you an avid gold bug? I am not, but I've started taking it seriously for the first time in a long time. I still think that Bitcoin presents a much more compelling risk-return profile because you're basically making the same bet as you would if you were buying gold, but it's 2% of gold, and I like the demographics behind the Bitcoin holder base versus the gold holder base. And is the silver market too manipulated? You're exposing my ignorance, and I am getting up to my level of incompetence in terms of being able to comment on some of these traditional commodities markets. All right. Let's see. Any other questions here? My Brombino. I'm sorry that your baby burrito lunch has gone from $5 to $6. That's bullshit, man. I think you're joking about it being an opportunity for crypto, but I strongly believe that it is an opportunity. Probably an opportunity for stablecoins, though. Aaron comments, I noticed COVID-19 tabs in the UI. Yes, I will wait for other Bitcoin-related questions, but since everybody's mind is on coronavirus, I will share the screen and take you all for a quick spin through. This is our coronavirus tracker, pulling information data from Johns Hopkins. Our team, like many others, has been following this very closely because as the coronavirus goes, so go the macro markets. As the macro markets go, so go Bitcoin. And as Bitcoin goes, so go all other assets in this industry. So if you're not paying attention to the trends and kind of day-to-day within the disease tracking space, it's kind of a moot point because of the degree to correlation that so many of these assets, Bitcoin and otherwise, currently have to good or bad news related to the virus worldwide. We've pulled in data from cases, deaths, recovered, calculated fatality rates for countries around the world, broken that down by states, and different hot zones throughout the U.S. because we are a U.S.-based company. This is all available in our screener, and it's also available in our charting tool. So if you wanted to take a look at something like new deaths in the U.S., you can do that over any length of time and see the day-to-day trends, not just in the U.S., but in some of the other major markets as well, and how we're stacking up. So I visit this daily. We built it because we were getting frustrated at the UI for some of the other products out there. And this just happens to fit into the existing product that we've already built, our two core products between the screener and charting library, which obviously has much, much more that you can dig into besides the coronavirus and markets data, anything from market cap, on-chain metrics, DeFi stats. So if you wanted to know Ethereum loans originated on MakerDAO, compound. We've got a lot in here. Go ahead, play around with it, and let us know if you have feedback. I will stop selling I'm sorry, though. But since you asked, Kat asked, what is the mission of Messari Crypto Data Analytics? Or for investors, what's the benefit for small investors? Our mission is to organize and contextualize all crypto asset information. So we are an aggregator of quantitative and qualitative information on the universe of coins. We are not an enterprise blockchain research company. We're not a media company. All we care about is filling out complete profile information and helping people compare and contrast the merits of different assets so that they can make smarter investment decisions. This company was born in the euphoria of the 2017 mania, and none of us could wrap our heads around the prices that we saw during that time. Still can't. It was wild and probably not to be repeated in terms of bubble, but it certainly helped us get a head start on thinking about fundamental value drivers for these different assets. Have we noticed HBAR's recent performance? I'm not going to comment on any asset other than Bitcoin because that is the narrow focus of my talk right now. And yes, I have had my Twitter account back for quite a long time. Only been hacked once or twice, but now I'm safe and secure. Over under on hash rate decrease post halving. This is a good question. So let me see if this has been incorporated into BTC hashing. I believe it has been. We can actually take a look real quick. Bear with me 1 second while I pull up the chart on Messari. That looks like something's going on. I will get back to you with a link so that you can check that out. But we've got a couple of updates going on for an announcement this week on the back end, and this is one of the data sets that's getting updated, so that's why I wanted to check first. Last time around, the decrease was, I think, in the teens. It was not major, but it was also very temporary. So immediately following the halving, I would expect to see some decline. 25 to 30% sounds maybe like it's on the high side for an over-under, but it's certainly possible. We shall see. We are coming right up at the top of the hour. I hope this was helpful for those of you that are here. If you want more info on the Bitcoin halving or any of the products that we just showed, head over to Messari.io, take a look. Got a big research report coming out on the halving, along with a series of podcasts on the subject this week. And you can catch all of our daily fodder and my above the fold commentary if you go to Messari.io/newsletter. So I look forward to carrying on the conversation there, and appreciate you guys tuning in late here on a Sunday night East Coast time. I've got my coffee. I'm on my head. Cheers.
All right. Thanks, Ryan. This was a really informative talk. We're going to transition to our next session now.
Thank you. Great job.